I am definitely a long-term bull for Lucid, and I support Lucid way more than I support Mullen Automotive and many of the other EV stocks that I mentioned, including Rivian and Fisker. The market sentiment has turned against EV companies recently, but I don't think this is going to be long-lived. Of course, right now there are a lot of hurdles for EV companies, cost of goods rising due to supply chain uncertainties, even the capital expenditures for EV companies are incredibly high. And many of the newer EV companies such as Mullen haven't even started making profits. Now, the thing about Lucid that sets it apart is that it's targeting the luxury EV market. And now that they've partnered with Aston Martin, that means it can tap into the luxury rich people niche that Aston Martin already has a foothold in. Look, the super wealthy are also looking towards EV vehicles, and a luxury equivalent of that, partnering with a renowned brand like Aston Martin, is definitely a win. This year, Lucid wants to increase production by 100% year over year. Because last year people were disappointed that Lucid had a production guidance of 6,000 to 7,000, which they did eventually exceed. However, this year they're aiming for 14,000. Lucid had a stellar 2021, but they struggled to bring that momentum into 2022 due to supply chain disruptions and delays in production. Since they weren't able to scale, they are saying that they have the current conditions to be able to scale production to 14,000, almost double. The problem is right now with the EV industry, and this applies not just to Lucid, but all the EV companies you're looking at, well, Tesla lowered the cost of their electric vehicles, which increased the pressure for other electric vehicles competing with Tesla to also lower their costs. But the one thing I must say with Lucid is that they're targeting the luxury EV vehicle sector. They're not aiming to be cheap. They partnered with Aston Martin. They're aiming to be that exclusive EV vehicle, which is why I think that the demand for them is going to be inelastic. People will still buy luxury if they can afford to buy luxury. I mean, of course, if the markets crash, yes, we'll see less of that. But it's like during the pandemic, rich people were still rich. Now, the only time I think it might not meet its 2023 targets, some of the risks it has is supply failures, and if inflation saps demand and no one is demanding electric vehicles, and maybe also a full-fledged crisis with the US banking system that causes Silicon Valley banks to collapse, that would also be very problematic. However, I'd like to add that Lucid's performance when it comes to revenue ever since its inception, since 2021 and today, has been pretty decent. In 2021, Lucid Motors generated $608 million in sales, which was a commendable achievement, but people expected it to grow even faster. But now that they have had the Saudi Public Investment Fund buy more than 1.8 billion shares, they have further funding, and this allows them to expand into other regions. For example, they are looking to expand into China, the United States, and also Saudi Arabia. Now, according to TipRanks, which gathers analyst ratings from Wall Street and all their opinions on the stock, they have given it a moderate buy, and this is based on 3 buy ratings and 2 holds. I do think the 2 holds are based on the current macroeconomic climate. They think that maybe the prices will fall further before we see an uptick, which I do understand. So I would personally wait a little bit more. But yeah, they're saying that they're expecting the price to reach $8.80 in the next 12 months, which is a 27.91% upside. And these are based on ratings from people from many, many different banks. However, what is interesting to note is that Morgan Stanley has said it's a sell, which is interesting. And I think this might be a short-term sell because of the current situation that's happening with Tesla increasing the pressure on EV vehicle prices. But with the Aston Martin news, I do believe that Lucid's system could be the one that luxury vehicles choose, and this could cause huge stock price rallies in the future. I also want to note that in their 2023 Q1 results, they said that they're on track to produce over 10,000 vehicles in 2023. And they said that their Q1 revenue was approximately $149 million, which was a year-over-year increase of 159%. And they do have a healthy cash balance of $3.4 billion in cash and cash equivalents and investments. And their total liquidity is around $4.1 billion. And they've said that it's sufficient enough to fund the company at least into Q2 of 2024. So let's see how this Aston Martin deal goes and also how they enter into the Chinese market. So guys, I hope you enjoyed this video. This is not financial advice. This is just my opinions and me presenting the information I found and my take on it. If you did enjoy this video, hit that like button and that subscribe button and that bell notification so that you get informed on when I release a video. Thank you guys for watching. Bye.